All right, welcome back. Hopefully the morning so far has gone well, and you've had some great insights from the speakers. I know I enjoyed them, so hopefully you did as well. Really honored to have Stacey Bishop with us today. As I mentioned, she's with the Scale Venture Partners. She's a partner there, and one of the most down-to-earth venture partners that I've met. And I've been honored to get to know her over the last couple of years, and we share some common background with some companies. So thank you, Stacey, for joining us. And at the beginning, what I want to do is just let the audience get to know you and a little bit about your journey to venture capital. How was that your intention from day one, or did you end up there through a roundabout path?
It was a bit of a roundabout, but it's been a long journey. I think the surprising thing is I've actually been at Scale Venture Partners for 17 years. So I joined kind of shortly after business school. It was sort of crazy. Joined as, sort of at the lowest tier, and it's kind of a rare place to be where you sort of work your way up. But venture capital truly is an apprenticeship business, and work closely with some of my partners over the years, and then eventually I was allowed to lead some of my own investments. So it's been a fun journey and a great experience. So many different entrepreneurs and businesses I get to be exposed to. It's really wonderful.
That's great. So tell us a little bit about Scale Ventures.
Sure.
What is your focus? Where are you based?
Right.
Let the audience know a little bit about Scale.
So we're based in, I'll start with that. We're based in Silicon Valley, specifically Foster City, which only if you fly in do you actually know where Foster City is. It's one of those kind of towns out in the water right before you get to the San Francisco airport. But generally, in the Valley, Scale Venture Partners, broadly speaking, invests in enterprise companies, so mostly selling to businesses. We do a lot kind of at the infrastructure level, what I think is kind of selling to the IT people, and a lot at the business application level, selling to the CMO, VP of sales, CEO, and the like. And I tend to focus more on the business application side. And in particular, we've done a lot of investments in the marketing tech side. So over the years. So Omniture, that's how Dave and I got to know each other, was one of our kind of earlier investments. And that, as you all know, was a great outcome, not only for this area, but for investors and the like, and employees and whatnot.
Are your investments purely, mostly in the U.S. or global investments?
Yes, we're mostly U.S. investments. We'll occasionally do something where it's maybe a company in Israel or Denmark that is moving operations or moving a portion of operations to the U.S., but generally all the companies are go-to-market focused in the U.S.
Okay, great. Now Stacey's had I would say a trifecta. I mean, out of all of her investments, there's three that I know of and have followed or been a part of over the years that she's helped or sourced or been a part of. One was Omniture, which as you've heard this morning, I was a part of. She's also been involved in HubSpot and ExactTarget. For those who know ExactTarget, a marketing company, a SaaS company, and all of them have been very successful. And in fact, two of them went public and then were acquired, and HubSpot was recently went public as well.
Correct.
Tell me about those experiences of being on some really successful SaaS companies and being associated, and what's been the experience with those three companies?
Well, I think the first thing I want to note is there's this general thinking in the Valley that in Silicon Valley where only the great companies can come out of Silicon Valley. And I want to say they're dead wrong. And I think these three companies are perfect examples of that. Omniture based in Utah, HubSpot in Boston, ExactTarget in Indianapolis. And all three of those companies, their nearest competitor was based in the Valley. And I would like to say they crushed their nearest competitor. They not only outperformed based on revenue, they outperformed based on valuation, if you want to use that as the metric. And I think it's impressive. And I think some of the reason for that was, people say, oh, there's a lack of talent, which I also think is they're dead wrong about. There's talent everywhere. But I think in all three cases, these companies built these hugely loyal employee bases. And when I looked at the companies and looked at the exec teams over the years, they generally were very stable exec teams. Now, as companies grow, you may need to bring in a new VP of sales, but often what I would see in these companies is perhaps whoever might have been running sales in the early days might do a different role in the company. And I think that was one of the keys to their success, was just building these really strong employee bases, building these super strong cultures, and also, they were all maniacally focused on the customer. So I think that really mattered in the end. But it was just great to see huge successes, outside the Valley.
That's great. And all of them from my perspective, have very different CEOs. Josh James was the CEO of Omniture. Scott Dorsey was at Exact Target, great leader, and then Brian Halligan. But
Yeah.
you seem to differ. That there's actually a lot of similarities.
I mean, I think there is similarities.
Yeah.
A couple of reasons that when I look at the teams, they each had multiple co-founders, and they kind of stuck with the business for quite some time. They were all first-time CEOs. Another thing is 2 of the 3 CEOs were actually MBAs, which sometimes people think, oh, MBAs, they can't go run businesses. So that was the case. I think another thing I'd want to point out, and I actually have to thank Josh James for this, he introduced me to Scott Dorsey because Scott was, Exact Target was one of the best partners for Omniture. So I feel like that one was, those 2 were very tightly linked. And in fact, those 2 companies were very close. And I think Scott learned a lot from Josh. I think in particular, one notable thing, and you're doing it here with, hosting your first customer summit. Both companies did a great job with that, found huge success with it. And I think there's a lot that Exact Target kind of took the playbook from Omniture and said, ooh, that works really well. Let's do that again. Because they were probably 3 or 4 years from a, scale perspective behind Omniture, and just really took that to heart and operated fairly similarly. I mean, I would say, yes, the CEO styles are probably very different. I think Josh is, as many of you know, he's very outgoing. He can be, he's aggressive. He loves billboards. That's his style. Whereas Scott fits a little bit more he's a little more reserved, kind of what they call the calm Midwestern kind of folksy style. So they're very different, but they both created similar companies in the way of really good cultures with the company, very loyal employee bases, and like I said, just huge focus on customer. HubSpot, I would say, different more so because their target customer is different. They only go after the SMB. They have no plans to go to the enterprise level. So therefore, even the way they do everything in the company, the sales is different. They're very much this inbound sales machines, have content out in the market and have people come to them because they're interested in the HubSpot platform. And HubSpot as a product does quite a lot, but it's very different. And Brian comes from this company, Parametric Technology, which is this hard-charging sales culture. So it was interesting for him, but one of the reasons why he started HubSpot is he thought, boy, this selling thing is really hard, just pushing products onto people. Let's create something where people come to us more so than going out and trying to sell things to them. We've all read this, but most of the buying cycle today, it happens much later. The sales part of it, it's marketing that kind of drives the buying process. 2/3 of it is now driven by marketing, and that's what HubSpot very much believes.
Yeah, that's great. I don't know Brian. I know Scott and Josh very well. We were fortunate to have them as investors. So it's been interesting to see the experience that they have brought, taking companies public and being acquired and kind of having those exits.
Right.
What do you look at scale in general, but also you as you make your investment decisions? What are some of the key things that you're looking at when you're looking at businesses from an investment perspective?
Yeah, and I think for us, most importantly, is we want to understand the pain point the company is solving, and want to make sure it's high on the priority list for the prospective customer. So one of the things, say in like the MarTech land, there's a lot of solutions out there today. A lot of companies have been formed, but making sure that you're solving one of the top 1, 2, or 3 sort of pain points that, say, the CMO is facing or the VP of sales. And just make sure that it's high priority, it will be used, it solves a problem. I mean, I think in marketing, we like things that help drive lift in revenue. I think customer success, by the way of sort of stopping this leaky bucket, as we call it, of customers leaving, that provides lift in revenue, so hugely important. So that's why we're super excited about the category. So yeah, looking for that point, and that's when we talk to customers, that's what we're looking for is, how important is this to you? If you had a budget cut, would you cut this product? And when you hear like, no way, no, would I cut this? I mean, this would just crush our business if we didn't have it anymore. That's a really compelling, value proposition. We try to avoid things that we believe are kind of nice to have solutions.
Yeah. So you're looking for the main pain points.
Exactly.
How often, I always wonder from an investor, how often do you feel like you missed out on an investment? Is that often?
That's actually often.
Okay.
It happens all the time. And the most important thing with that, well, look, I mean, I'll even admit with Omniture, we missed the first round of Omniture. We didn't miss it, but we lost out to another investor. But we stayed in touch and kept on that one, and we're able to invest a year later, and we're thrilled about that. So we, with great companies, even if we miss them, we still try to stay in touch and make sure we can find a chance to invest. But that's the worst thing about venture capital. I mean, losing an investment is one thing, but that's kind of losing, let's say our typical investment's $10 million, and losing $10 million is horrible. But missing out on the investment that was a 10x plus for a $10 million investment, a $100 million investment, that's the big loss in our business. So we agonize a lot over it, and we actually spend time looking at kind of all the great exits in the past and go back and look at them and say, what did we miss about that? How could we have gotten to that sooner? Why did that take off when it did? I think Slack is a great example of a company we missed, and now that one had a unique history that it was originally a gaming company, and Slack was just part of it, and then it just took off as a rocket ship, and by the time we got to it, the valuation was crazy. But those are the big misses. Are those kinds of things.
Speaking of Slack, one thing I wanted to mention, we wanted to open up this session to questions from the audience. If you'll go into the Slack channel for CS100 under hashtag Stacey Bishop, if you have any questions you want us to ask her at the end, we'll open it up. So to go ahead and interact there. And we'll open it up for audience questions. Burke will read those right off Slack, so engage that way. You're a lot of experience in MarTech.
Yeah.
If you look at everybody's seen the MarTech landscape slides. It's mind-boggling how many technologies are on the marketing sales side. Do you see that slowing down? Is there going to continue to be just tremendous innovation on that side?
I mean, what I see happening is just there'll be a lot more consolidation, and we're already seeing that happen. I mean, I look, for example, I'm on the board of a company called Demandbase, and Demandbase has already made, they're a little company, and this wouldn't even make the news, but they've already made a few acquisitions of kind of ways to add on to their product. I mean, Omniture was very successful in making several acquisitions. So I think what you'll see is these companies, as they become larger and become more of a platform like Omniture did, they'll start to bolt on other solutions. So I think we'll see consolidation happening. But it is easier to start companies and get companies up and running. Companies need to be smart about how they go to the market. And go back to that original point I made earlier, is make sure you're solving one of the top pain points. Generally, we invest in companies. We're not looking to invest for the company to be acquired. We want to go for it. We want to go for the IPO. And if they get acquired along the way, oh, great. But generally want to go for the big play and make sure it's solving one of those top pain points.
Okay, great. With turning to the topic of customer success, what's your overall take on the space? Just the movement of customer success over the last several years, and still gaining momentum. What is your take as an investor?
I mean, it's hugely important, customer success. It's actually kind of surprising to me that customer success companies like ClientSuccess didn't start earlier, weren't closer to when kind of the SaaS wave took off. But it just took time. And we know companies like Salesforce and Zendesk and others kind of built their own sort of customer success solutions initially.
Yeah.
I think now they're buying some type of vendor to do it. But that's how markets get started, is the pain point is there, and companies are just building it in-house and creating these early warning systems because they realize it's a must-have product. And I think companies that realize how important net retention is for their customer base and retaining customers, it's critical. I mean, it's one of the things, if we see high churn, we run from companies. It's the kiss of death for SaaS companies. They just can't survive if their churn is too high. I mean, one of the things I remember early on with Omniture is, Josh had said to me, a dollar of revenue today is $1.17 of revenue next year because the customers were growing and the way the solution was priced. That was one way to see growth. Another is, product upsell or more usage, the land and expand. If you're a company like we're investors in Box or DocuSign, they very much have the land and expand, get into a department and then hope you can get the whole company to adopt. And, customer success is hugely important in those cases. And sales too, Sales can very much be tightly coupled working on that.
So when did have you always looked at the customer success metrics, or when did that shift start happening? Was it 5 years ago?
Yeah.
When did you really start to pay attention to that side of the business versus purely the growth side of any investment?
I would say we always paid attention to churn from an investments perspective. It was always something that we did. And I think one of the interesting things, this is just more looking at kind of math, but companies when they start out, say it's a $1 million run rate company, it could be growing 300%. And their churn rate could be 15%, which doesn't sound that bad. That sounds like, okay, that's manageable. But once once a company, growth decays over time, a company can't grow 300% forever, so the next year they might grow 100%, the year after 70%, and therefore. But once you're 70, 60, 50% growth, if you have 15% churn, that's really eating into your business. So we like to see churn. We love companies where net retention is north of 100%. That's kind of the gold standard for what I would say enterprise-focused companies. HubSpot publicly reports their numbers. They're in the high 90s% for their net retention because they focus on an SMB customer base. There's just natural churn there. We know that little companies go out of business or don't have budget for the product. So they really have to manage that carefully. So I think we were always watching it, and companies were watching it. Look, you did that at Omniture, so there was a focus on it 10 years ago. But there weren't solutions like there are today to help with it. And I would say it's just gotten a lot more attention focused on it because there's so many more companies and realizing that it's a winning strategy. One of the numbers, having the high net retention is hugely helpful. It's basically adding growth to your overall revenue. So I just think now that, it's been helpful with companies coming to market and kind of creating, customer shows like this and just creating more awareness around it as as an area of focus. But I think it's hugely important, and it's great to see because it's as I use that math example, it's critical.
Yeah. Switching kind of hats from making a decision of investment to now I'm a board member or it's a current portfolio company and I'm in the boardroom. What do you like to see? What do you want leaders like this in our room bring to you as a board member? Or they may not present it, but there's metrics or insights. Give us insights about what you see in the boardroom from a customer success perspective.
Well, a given is just to sort of have your customer success dashboard, whether the customer success person is in the boardroom or not. Oftentimes with companies, how I see they run boards, or they might have one division kind of present at each different board meeting. Some, they have everybody join, but as they get bigger, they might focus on one. But the metrics are always there. So having your standard dashboard that's consistent metrics, board meeting to board meeting, and understanding what are the key drivers of your business. The numbers I throw out is, I want to see the net retention, but I also want to see gross churn, because sometimes a good net retention number can hide a high gross churn number, because you've got great upsells. But understand the fundamental reason why these customers are churning out. Oftentimes if it's a really enterprise, Fortune 500 company or Fortune 1000 focused company, you want to see, who are kind of your top customers at risk, and kind of see those ones who sort of have the yellow light against them in terms of at risk. Because sometimes as a board member, you might be able to help and get involved. Maybe you know somebody there. But watching those, and then most importantly, really want to understand the reasons for churn. Why are these companies churning, and is there things that they can do? Oftentimes customer success can only do so much, and it's product or sales. Perhaps. HubSpot ran into this in the early days when we invested. They didn't have a good filter on who they were selling to. They were kind of selling to anybody, and then they realized, wait a minute, these customers were churning out. It wasn't the right fit. So they kind of put into a process of really making sure they were selling to the right people, and having and onboarding is another one. And onboarding is something customer success can drive, but in that the example of the sales, that was a sales issue. Or perhaps it's a product issue. Maybe there's a feature missing that companies really want, and they're leaving because they don't have that feature.
Yeah. We have a saying that success is the new sales.
Yes.
And we've seen over the last year this shift in influence within organizations, where many of the VPs in this room have a higher quota if you look at expansion and renewal than their sales counterparts. And so their influence in the boardroom or in the executive offices have changed. Do you see that? Have you noticed that from your perspective?
I would say it's hugely important. And, we don't always know those exact numbers. And sometimes you and I were talking about this yesterday, whether, is customer success as far as the renewal, who's responsible? Is sales partially responsible? Is customer success 100% responsible? I think different companies have different approaches. Maybe at the low end, it's all customer success. At the high end, you had mentioned this, it's a mix. So it becomes hugely important. But yes, it's something very closely watched, and I think sometimes we even kind of describe it as the heads of customer success can be the unsung heroes in terms of I would say even in HubSpot's case, that was their head of customer success was kind of that way. He didn't have a huge profile at the board meeting, but he really helped that company because he just hugely improved their churn numbers, which made their overall growth numbers go up significantly. Yeah. HubSpot was a company, as a public company, that actually had accelerating growth while a public company, and a lot had to do with the customer success function just reducing churn, and it was phenomenal in terms of that. I mean, that's a really, really hard thing to do to accelerate your growth rate without applying extra capital when you're of that scale.
Yeah, I want to pull the audience real quick on this subject. So, how many in the audience have customer success owns the renewals? Raise your hand. Okay. How about sales owns the renewals? All right, and anybody who has a separate renewals team? Okay, so we see those are different models there. We talked about that. What about who in the audience feels like you have you play a vital role in board meeting prep or actually participate in board meetings? If I raise a hand. Okay, good. And that's what we see. We see more of that over time, and it sounds like that you're seeing that from your perspective.
Yeah, I mean, if I think of the boards I'm involved in, I would say more than half the customer success person is there each and every time. In some, it's just more we're kind of getting reported on, the metrics. But certainly, it's always, a topic covered in every board meeting, always. So no doubt, it's hugely important.
And do you see are the metrics consistent? I think that's one of the problems in our industry right now, or definitions of the metrics that we all subscribe to are very different from one company. Do you see that as well?
Yeah, absolutely. And in fact, we've got a person at scale who's not sole focused, but he focuses a lot on kind of benchmarking across companies. So he in particular sees that. But what I would say to companies is just make sure you're consistently reporting on it, even on your own. It may be hard to cross-compare to different companies. I mean, I think it was Pacific Crest put out a study on different, what does net retention mean? And, what are people looking at it for their entire customer base? Are they only doing a subset of their customers? And it was all over the map. But I think as a board member, I just want to at least make sure you're consistently reporting and not changing the underlying metrics, because at least then we know how you're doing against yourself, and then we can figure out how to normalize your numbers versus somebody else. But yes, the inconsistency is hard. But that's actually my pet peeve as a board member, just in general, is if the metrics that you're being benchmarked against change, like particularly even just a revenue plan. If you keep changing the plan, it drives me crazy, because I just want to know the consistency. So I think that's the way to manage it as a customer success rep, and be clear about what your definition is as to how you're measuring it.
Transparency and consistency.
Exactly.
Great advice.
Exactly.
Burke, do we have any questions from the Slack channel?
Yeah, it was lighting up pretty good. One question I think that's great for the group is, besides retention, this is from Jeff Cummings, what other metrics are highest on priority when you're looking to acquire or fund a business?
I would also add, some type of usage or engagement metric, whether it's, if I'm going to just use ExactTarget, for example. I mean, that's where we'd want to know sort of email sent per customer, how's that growing over time? With a box or something like that, you'd want to know what's the usage across the customer base, how often are people logging in, whether it's calls to your server, whether they're asking for data, whatever it is, we want to know some type of engagement metric. And another thing, particularly in the marketing tech land, you have to be careful. Oftentimes customers will churn because of the loss of a sponsor. And so, understanding, are you getting across the company and not just focused on one person if it's kind of a solution that's not on a per seat basis. So really understanding whatever it is for your business, the usage and engagement metrics beyond just the churn.
Yeah, we call that high and wide, going high and wide in an organization, and making sure you have relationships across the board.
Right.
Burke, one more from the audience.
All right. This is from Ursula. How early should startups consider establishing customer success practice, and what role would the CS leader play in the funding effort?
Yes, well, I mean, I think in the funding effort, I'll just start with that. I mean, that goes back to those metrics and understanding those numbers and how established is the group. I mean, what I've been seeing recently is companies bringing in heads of customer success, at the $2 or $3 million ARR level, And I would even argue you could bring someone in early, because I would say these companies brought it in because they were starting to see renewals come up, and they clearly were starting to see something happening there where they're like, ooh, we better get on this. And what would be nice for companies to be ahead of that, to bring in their customer success, anticipating that renewals are going to come around, anticipating churn that may happen. And so I like to see it very early. I mean, it doesn't have to be a VP level person. I mean, one of my portfolio companies actually took somebody out of sales and put him in as head of customer success, which was hugely helpful. And it was at the fairly early stage of the company. So I think early, very early.
So a final parting advice for these leaders, what would you say for all the customer success leaders in here? What would be their advice, your advice for them as they build their practice?
Yeah, I mean, it's a hugely important role. Be very metrics driven, be focused on everything in your business. I mean, that's what's great about solutions like ClientSuccess and others that can just help you do that and do it automatically and not have to have you build your own, so you really can get this picture into what's happening in your business, because it's so important. Like I said, I mean, when churn happens, it's the end of, it's terrible for a software company. So it's your job to prevent it. So you have a hugely important role in the success of the companies.
Great, thank you. It's been a pleasure, Stacey. Thank you so much for coming out here. I think we all got some great advice on how we should look at it from your perspective, and we really just appreciate you coming out today.
Great, thanks.
Thank you.